So, friends, do you remember I had like this dream where Major Loser Powell was standing in front of a podium and he basically has to capitulate? And it was like such a strange dream. It was like a 3 a.m. You remember? And I woke up, I'm like, something weird happened. It's really, really weird. Well, there is a scenario where this happens. This is the US 10-year bond, okay? Now, Major Loser Powell, he's a CUNT and a dope and incompetent. That's what Donald Trump calls him, and he's a major loser. Now, he is going to cut rates, okay? So when they cut rates, in the past, this is the US 10-year bond, the bonds are meant to rally. What I've actually done here, I've changed the bond price to yield, and I've inverted the chart. So if you look at the right-hand side here, as the price goes up, the yield goes down. You see that's 1.5, 2.5, 3.5, okay? So right now we're at 4.17. Now, there is a world, and this is, by the way, very common since 2008, where if they cut rates, see, this thing's meant to kind of go up, but if this thing just starts pooping the bed, it's going to get very scary. Not for you and me, for the government. Because they go, uh-oh. Because what happens, friends, is this is their 10-year funding rate. Yeah. If you're supplying bonds to the world and people are vomiting out your bonds, they demand higher yield. They're like, hey, man, your bonds are dog shit. We actually want them for 5%. We don't think 4% is good enough, okay? So this will invite, say, Kevin Hassett. You never know, or even Major Loser before he even leaves. It depends if the stock market or bonds blow up. They will have to do what we call yield curve control, YCC. Yield curve control, okay? So this yield curve control, basically it's QE. But with QE, what they do is they print the money, they take the cash, and they market buy the bonds. Okay, they actually hit market and grab it. They hit market and they grab it. They hit market and they grab it. Okay, yield curve control is they literally control the yield. So what they will do is, yield curve control is, instead of printing money and then hitting market, they will print money and they go leave a big bid. A bid in the market, like a big buy wall. So that's what I've actually done here. I've drawn like this box. So they could actually, if they want, they've actually done this in the past. It was called Operation Twist. I think they did this in like 2013, 2014. I remember I was trading. I had no idea what the hell it meant. Like back then, like I was like, no one had any idea, right? I remember this guy I used to trade with. I think it was Aaron. I remember Aaron, man. He was trying to teach me about gold and stuff back in 2013. I'm like, nah, I don't understand what the hell's going on. My brain wasn't ready. It was funny. Now, he wasn't into Bitcoin or anything, but like, you get close, but you're just not. Yeah, you need to be ready to understand this. Not just what's happening here, but like, what's the solution? Okay, remember Bitcoin was like, $100 back then. Okay, so yield curve control. So friends, what I've shown you is, there is a scenario where the yield of the bonds can crack, and stocks and crypto, they're not vomiting as bad. Okay, now they could vomit, but they don't have to. Okay. So basically what I'm showing you is there is a scenario here where if these bonds poop the bed and there's no bid for them because they want them to go up, right? That's what the US government wants, a demand for their bonds. Every government wants a demand for the bonds. But if we don't get that, okay, what ends up happening is the US Fed's going to have to come in and they're going to have to do yield curve control. Now, even Arthur Gaze has spoken about this as a type of action that they'll have to do. They won't call it, QE or anything out here, but also what they will do, friends, you got to think about what they're doing here. If they're making a bid here for 10-year bonds and the yield kind of gets like forced up, the yield will get lower, but the price will force up. So you got to look at it right here. So this is like, instead of 4.5 or 5%, if they can push it up to say 3%, okay, think about this, on trillions of dollars, it will force investment into shorter term stuff to take on more risk, which is what they want to do. For example, AI next year, because if let's say you have $1 million, yeah, if you put it in a 10-year bond, if the bond's 4% now, you get $40,000 a year. But if they can do yield curve control, they put it 3%, you don't get your 40,000, you get 30,000. Okay, now obviously you're doing it with trillions of dollars moving around. There's a big gap that they're not making any more of their money, and they're forced to take on more risk. And that's why we think, well, not even think, I mean, like Donald Trump, the US Fed, all the politicians, they've said we're going to run the economy hot next year. That's pretty much how it all has to happen, right? Because if you're going to run the economy hot, who's going to buy a bond and get 4%? Okay, they're printing at 8, right? So it's kind of give you an idea. The US Fed has to come and monetize the debt. This is QE, friends. This is QE. Now, obviously, this is a very, very delicate thing because, friends, as these bonds, because this is what happens, right? Because you're looking at the inverse of the bond here, but this is actually the yield, the bond price as well, the inverse of the yield. So if the bond prices start collapsing, you know, that means that the rate's going up. You might find like crypto shitting the bed with it as well, and stocks. But because we've kind of like front run a lot of the poopiness, it's not necessarily requiring us to dump at the same time. But it is correlating such that if the bonds go up, if the yield goes down, you know, the yield goes to 2.5%, crypto's mooning. Crypto's mooning because people have to go and seek higher forms of return out there in the market. So that's why, friends, it's very important, I guess, for us to even look at the M2SL chart. And you see that they're printing a crap load of money, and they have printed a lot of money. And there's no way else out for this. And like everyone's aware of the game now. They're not going to use these words. But like, you know, the amount of blue pill cuckery we see out there in the real world. I mean, like, there's a lot of tricks that they still have. Okay. There's a couple of things that the crypto market's kind of sniffing out. Ethereum is rolling upwards. Very interesting. Ethereum is like gaining its footing. That's a big bonus. You also have OTHERS-btc, as we know. Remember, the white dotted line is the quantitative tightening, the balance sheet of the US Fed. That's now ended. Okay, so it's kind of like we've hit the end of the road now, where it's like, okay, no more QT. You're not squeezing us by the nuts. Ethereum looks like it's about to roll over. OTHERS-btc, which is outside top 10 altcoins, the belly of the risk, right? That's also looking like it's like ran out of sellers. Yeah. You have this US 10-year bond, like it's meant to go up, and not just a 10-year bond, but they're kind of meant to go up, but there's no bid there. It's kind of like, well, no one wants to bid them. It basically, friends, like, it's kind of like that scene from The Good, the Bad, and the Ugly, okay? You know, where everybody's like looking at each other, and they're like, hey, US Fed, you're the last buyer. We know you're going to have to buy the bonds, and the market's pretty much just hanging out there and doing it. Okay. Now, remember, it's very important as well that those bonds, friend, this is something interesting that happened earlier this year. You know, I just showed you the US bond here. Do you remember when Trump won and he started doing the Trump tariff tantrum here? It was actually right here, friends. You see this? During that time, there was a bit of uh-oh. That's why Trump kind of like, okay, no more spoofing the market. Because what happened was, they were like doing the Trump tariff tantrum stuff. And they're like, oh, you know what, China, your sex robots suck. That massage, it was a bit too aggressive. You know what I mean? She didn't oil me up properly, okay? When Trump was talking about China and the tariffs, they were like weakening the economy. And S&P was going down. But something went wrong. Right here, you can actually see it. This is actually, friends, this is a weekly chart. The bond was going up initially. See this? It was going up. So the yield was going lower, which means that they're bidding up the bonds, which America's like, hey, that's okay. Because like we're government, we're supplying fiat currency. If there's more people scared and they're buying our bonds, that's cool. You know what I mean? Because we want to spend more money and like all these suckers are buying and bidding up our currency. Something went wrong though. Okay. Look what happened. The next week, boof. And it was actually right here, friends. They went, okay, that's it. China's our friend. They stopped it immediately. Okay. So this just gives you an idea of everything that's going on. So they spoof and spoof and spoof and they strongman. But if the market, world market, you know, Japan and everyone else out here, if they start pooping the bed with the bonds, it's game over. That's when the US government goes, uh-oh, okay, rewind. All right. Now, that's why I'm telling you this has happened. This already happened, 2024. Actually, it happened this year, friends. It happened this year, okay? So, it didn't even happen like less than a year ago. And you've seen it ticky down here. Isn't it interesting, right? They're about to, friends, they're about to cut rates, and this thing doesn't even look like it's rallying. Okay, but like, I know this thing is destined for higher somehow. It's just, this thing is like damn, man, is like, it's going to force the Fed in. Now, why this is important is, remember my dream? Some reason, everybody's looking at stocks. Everyone's looking at stocks and they go, stocks are high, Fed's going to print. It doesn't usually happen like that. Everyone's watching them. No one's talking about the bonds. That's the weak point, you know? So this might actually be the weak point where this thing starts pooping the bed and then Fed's going to have to come in and be like, okay, you know what? Actually, we're going to expand the balance sheet. QE's back on. You know, they might not say it that aggressively, but, you know, they might work their way into it. So I just want to show you, this is a cool macro thing we're looking at here. Because, like, you know, altcoins have been ravaged for a long time. They run out of sellers. Ethereum's run out of sellers, you know. I don't mean like, you know, absolute sellers. I mean like, you know, relative to the ratios, it's pretty much all game set match now. Okay, so they're cornered. They have to do this. And it coincides with what happens next year, right? They're going to run the economy hot. They have to. It's China versus America with the AI war. What are you going to do? Slow down your economy for 3 years and let the other guy win? I don't think so. Then again, we're still stuck in the matrix. So who knows what plan they have. I just hope, like, we don't get because I don't think we're going to get this, but it's still possible, man. If we could just get a freaking 25% down S&P 500, crypto shits to bed, S&P, everything's game over, just like 2020. It could happen. But this could also happen. This thing starts really, really tearing them a new butthole, okay? Remember, Kevin Hassett, friends, comes in here, all right? So it wouldn't be out of the question to expect where he even starts hinting, you know what? You might need to do some yield curve control. All right, all paths lead back to the money printer. Like, subscribe, belly button, or catch you soon.